Good morning, this is Jack from Charting Markets, and this is the pre-market webinar for the morning of Wednesday, the 22nd of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some what I'm doing, learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at Charting the Markets or Substack.com. It's published on YouTube after a delay of 3 days. Sorry, 24 hours. All right, okay, let's have a look. Now, at the moment, we're kind of in a holding pattern since we made this high a couple of days ago. And in terms of where we are on the war, obviously the Iranians declined to show up for talks because obviously the Americans don't appear to have accepted their proposals, even though obviously this peace process started with Trump accepting that as a basis for negotiation, but obviously I'm not even sure they wrote them. So the Iranians pulled out. None of the Americans left. Certainly Vance didn't go. I don't think the others went either. And at the moment, the peace negotiations are in limbo. So at that point, Trump didn't launch a ground invasion, which I was a little concerned he might, or start bombing again. What he's done is he's extended the ceasefire indefinitely, but he's keeping the blockade on. Now, it may be that he's going to slink away and basically accept the defeat and declare victory, but to do that, he's not quite there yet. He'll also have to drop the blockade, because the thing is, the thing which was roiling the equity markets and scaring the world markets was not actually that the Iranians were being bombed by the US, and not that they were worried, the world was worried about the US ground invasion and US casualties. What the world's focused on is the Strait of Hormuz and the amount going through it, and there's not a lot going through it. And if that doesn't change, then there's going to be big problems regardless of whether Iran's being bombed or what the US is doing militarily. And just to show, I used this as the chart of the day yesterday, but this is commercial ships seen transiting the waterway into the Persian Gulf, not out of, into. But you can see this was traffic before the war started, and it's been up over the last week or two, but it's still at a small fraction of what it was before the war started. And really, in order for a major supply shock to the world to be avoided, this is going to need to get back to close to normal under whatever circumstances. Now, it may be that if the US slinks away, it's likely that the Iranians will continue to control the traffic in the waterway, and that they will be charging a substantial, fee to any particularly oil tankers that go through it. But the fact is, that's just where we are now. At least if traffic goes back up, there won't be a major supply shock. It'll just be that everything that goes through there will be a bit more expensive than it was before. But it's not going to be a huge amount more expensive. I mean, you're just talking about a couple of dollars a barrel, whereas really in terms of just risk premium, over the next 6 months to a year or so, you're probably going to see oil added another $15-20 added to the oil price per barrel, just from the risk premium in case this conflict flares up again. So a couple of what would amount to $1 or $2 per barrel of oil coming out of the Gulf because of Iranian tolls wouldn't actually move that needle a great deal. What really moves the needle is if the traffic is stopped, and at the moment it's pretty much been stopped since the end of February. That needs to change, or we are going to see the supply shock that I've been talking about anyway. In the short term, though, the market is encouraged. I think we're probably going to retest this high. So let's go through this quickly, and let's have a look at the structures for what's been happening since the low on the equity indices, because that is important here. Now, the structure doesn't look complete to me, and I'll go through why that is. And that doesn't mean that, if a large US ground invasion is launched tomorrow, obviously it's going to drop like a rock. It doesn't matter that the structure is not complete in that instance. But in the absence of news, then it kind of looks like it needs to go a bit higher, and I'll talk about why that is. All right, looking at ES, no current divergence, not close to any divergence. This kind of looks like a small bullish consolidation, which would likely resolve higher. NQ, we have, the 6-minute sell signal reached the possible near miss target. We're already retesting the highs, and may well go higher. Looking at RTY, RTY Obviously, we've made all the targets from the lows, as I was posting a couple of days ago. Here we had a weak 6-minute sell signal fix yesterday, and that reached the possible near miss target, and we are close to retesting the highs. YM again has already retested this high. I'm thinking if this goes higher, which I'm thinking it will, I think it's now reached a level where I'm wondering about a retest of the high. That would be, well, not hugely higher, but significantly. And likely would be in the context of the others rising as well. DAX looks like a small bull flag forming. ESGX looks like a small bull flag forming. Nikkei, not sure I'd call it a flag, but if it is a flag, it's breaking up already. But we are close to the highs and likely they're not seeing anything at the moment to drag them down. And the structure is suggesting that we've got at least some higher to go. So let's have a look at the structure. All right. Let's have a look at SPX first. Now, in terms of the hourly charts, we had a little RSI 5 sell signal fixed on SPX that made target yesterday. We didn't have anything on the RSI 14, but I don't think there's anything really I'm looking at in terms of sell signals here that I'm particularly concerned about. What I am wondering about is whether we can get back to the 70 level on some of these RSI 5s, then retest the highs. That could set up some daily negative divergence, which would be an indicator that we might be about to turn. Although, as I've explained, when the RSI gets this high, and this is the highest RSI 5 has reached on this chart, you don't always need anything to tip it off. But generally speaking, you will have some kind of a structure here. Now, this low we made tomorrow, this actually hit rising support here. I can draw something around this. And this could be a sign if we go up from here. And obviously, there's going to be an opening gap this morning. This could give us a pattern. Another high could give us a decent looking setup to set up a retracement. But at the moment, resistance trend line thin and support trend line, we've now got a 3-touch trend line, and it looks as though that might hold with the opening thing. This could mean that a pattern is forming, but we're probably going to need to go higher first. We've not done that actually so far with what we've seen on the morning open up. And I'm thinking if we make a higher high here, I could actually get a decent pattern going. Looking at the keys, we broke down below this, but to be honest, I mean, this was an IHS. Sometimes you will take the move from the right shoulder, but ideally, if we were to get a decent looking pattern from here, ideally we'd probably take that rising support trend line from here. And we haven't reached that yet. We may yet over the next couple of days, but I'm not really seeing anything in terms of a decent looking pattern here either. Normally, you will get some better defined trend lines here, and at the moment, this doesn't look like anything. That generally suggests to me that the trend is not over, and that it's likely to continue in that direction until that changes. Again, nothing particularly in the way of trend lines on Dia here short term, so may well develop something. And ideally, all of these would probably retrace a bit more and then retest highs, and maybe we'd have something then. But all of these would probably, if they're going to form trend lines to the upside, would probably go at least significantly higher. And on Dia particularly, now we had a bit of a down day yesterday. That's been given back overnight, but on the daily chart, it's got pretty close. These would still be weak sell signals if we retested the highs from here, but we could get some decent looking divergences going. But we've now reached a point where I'm wondering seriously about a retest of the all-time high at 503.27, and I'm thinking we may well need to see that. All right, looking at IWM, I'm going to do a post about this in the next day or two, but in the short term, I'm just saying there are reasons to think this will go higher. In terms of this one, I'm wondering if we've actually reached this support trend line too. Let's have a look. I'm probably going to need to have a look at it on the 5 minutes. I've got this as a maybe. That could have reached that trend line there. Okay, that could be promising. But normally I would have some better defined patterns for the move. And at the moment, I haven't really got a lot. And in the absence of the Iran war starting up as a hot war again, I'm leaning higher, so we shall see how that goes. In terms of DAX, that could deliver a high retest, although we're a long way short of it. Nikkei has already, of course, seen a high retest, and if we retest the short-term high here, we could set up an RSI 5 sell signal brewing there. We will see. But we've got some decent-looking overall double tops here, but honestly, I think starting this war was very stupid. And I think that this was avoidable, and the problems we've had since were predictable. I mean, really, Trump went in thinking that the US was so scary that no one was going to fire back, and obviously that was a miscalculation. And all this sort of stuff's been war gamed to death by the Defense Department, but and if their advice isn't taken, then, well, it doesn't really matter. So, but I think I did say about 3 weeks ago that I thought the smartest thing that Trump could do at this point was declare victory and pull out. And a lot of his base in the US would believe that. Quite a lot of fair number of people, not many people outside the US, I suspect. But he could make an argument that he had done something which was useful, and he could slink away, but he hasn't done that yet. What he's done is he's basically put in an indefinite ceasefire, but he's still trying to pull something out of there which will make this look like a win, and that's why the blockade is still going. But if the blockade is blocking the Strait of Hormuz, then actually, to a certain extent, the war is ongoing, because the part which was really going to damage the world economy is not done yet. So I'm still thinking we may well be forming topping patterns here. Trump's going to have to swallow his pride. That is not easy for him. And he's going to have to accept something, which is already, there've already been approaches from the UAE, approaches from Saudi talking about, well, why do we have these bases of yours in the Gulf if you're not going to protect us? And it's a good question. I think, it's part of the Iranians want all of the US bases out of the Gulf. I think in the event that the war is basically over, I suspect the US may be asked by the Gulf states to remove all of their bases, and that will be a sizable humiliation for Trump. So we shall see. But I think we still maybe will be topping here, but at the moment, short term, I think I'm leaning. The structure has me leaning higher. All right, let's have a look at DX. Okay, DX. One thing I did note when I wrote the post about the US dollar about 3 weeks ago was that actually the dollar continued going up long after other things had topped out from the initial spikes after the start of the Ukraine war. Now, I don't know whether that would happen here, but I'm wondering if it might, and I'm wondering if this is a bull flag. We shall see. But I think we still got a very nice bullish overall bullish setup on US dollar, and I'm still looking around to see if I can find reasons why that might deliver. But the fact is, not all of these patterns deliver. It might not deliver. But I'm still thinking this might have a shot. We will see. In terms of UUSD, we had an IHS. We haven't quite made target. We've been consolidating. Not a lot to see on the others. If we go higher on the dollar, which I'm thinking we may well, even if it isn't far, then I'd be still looking for a retest of this high here at 162. Can't see the high on this chart, but it's there. And that could set up a very nice looking large double top. Possible large double top forming on Australian dollar, but not a lot really to tell from the others. In terms of ZB, the double bottom is broken up with a target in the 115.26 area. At the moment we are holding below the monthly pivot, and there's no particular sign this is anything other than a bearish consolidation. Bigger picture, I'm leaning down, and because this is there's an issue here about the Iran war, but it's really about mismanagement, financial mismanagement. The Iran war isn't helping with the American budget situation or debt situation. The deranged 27 proposal of a 5 trillion military budget, and the wild spending generally of this administration is really not helping confidence in bonds. I'm thinking we may see a bond crisis in the next few months, regardless of what happens in the Iran war. Just because if it wasn't for the fact that the US dollar is the world reserve currency, I think the US would already have had a bonds crisis. We see bonds crises all the time from various countries when they really don't have a plan for at some stage repaying their debt. there's only so far the US is realistically going to be immune from that. I'm thinking we could see a major bonds crisis in the US over the next few months or the next couple of years, and I think we may well be building towards that. This is going to put downward pressure on bonds, and I'm thinking if this looks like bearish consolidation, it probably is. In terms of ZN, this looks like a bear flag, which is already breaking down. In terms of oil, we have been obviously we've basically taken back all of the decline from last Friday when Trump was declaring that everything, the war's over and everything's great and all this sort of stuff. And obviously, it's gone up from there. Although I'm sure the person who made $700 million on a bet placed just before the Trump's announcement last week hasn't had to give that back. So obviously, that's good news for them. CL largely given that back. But the thing is, if the Strait of Hormuz stays closed, we're probably going to see all these heading up to towards $200. In fact, one of the many bizarre things that Trump has said lately, because yesterday he said that he'd have managed to finish, had he been in charge at the time, the Vietnam War would only have lasted a couple of months. But he also said that that really the amount that the oil price had gone up was peanuts, which I'm sure very few American consumers would agree with. But has also said he's surprised to see it was only in the 90 area, and he'd been more expecting to see it in the $200 area. That is the crisis level that we could hit if the Strait of Hormuz does not open up. We shall see. All right, so HO gave back Friday's decline. RBOB gave it back too. So we're back up where we were before, and unless the Strait of Hormuz opens up, these are going up a lot. NG, we're finally seeing a rally here, possible IHS forming, although it's not of the finest quality, really. I'm wondering whether we might see a move up and a rally back into about the 3 area. So we shall see. Looking at GC, we have been trading sideways here. I'm leaning towards this being an overall bull flag. There are some sell signals which have been fixing here, some indications that we might see some low retests or at least a significant pullback before we go higher. SI, if this is a bear flag, it's breaking down. Palladium, not a lot to see, but platinum, if this is a bear flag, it's breaking down. I am wondering about seeing some more downside here. We've got some sell signals on GDX and GDXJ. So I am thinking that we may well see some retracement. We shall see whether we get it. HG, this looks like a bull flag forming, and I'm wondering about a possible retest of this high coming. Looking at the other commodities, this still looks like a bear flag on KC. On sugar, we've broken up over this decline resistance trend line. I'm not thinking necessarily we got a low here, and if we do have a low here, I'm thinking we may retest a low and deliver a full retest of this low here. But I am thinking we might be bottoming out for a significant rally. CC, this is a perfect bear flag channel, holding support at the monthly pivot so far. So sooner or later, I'm thinking this is probably going to deliver a retest of the early March low. On CT, heading higher, the weak sell signal failed. Lumber may well be resuming the downtrend here. That would start with a retest of 560. ZW, we actually had a little IHS here, which has been stalled at the monthly pivot, and we've actually made that target now. So I've marked that as reached the target. I'm thinking we may see, and this is something I was writing about yesterday morning, I'm thinking we may well see a significant move up on wheat, corn, and soybeans. Over the next few months. Not saying that's starting yet, but that is something I'm very much thinking might be happening. So I'm watching resistance at the monthly pivot here. On corn, possible IHS here, but it isn't the best quality. But I am wondering about it. Alternatively, this could be a bear flag, which is overthrown. On soy, we're seeing a full test of the monthly pivot as well. If we break up and convert that, then this could be an IHS right shoulder, and we could be on the way up there too. ZL, we retested the high and are continuing higher at the moment. We do have a possible weak 6-minute sell signal brewing. Live cattle, I think this is probably just a retracement within an uptrend, and is going to. So I think this is probably some kind of a bull flag, setting up a retest this high, and then may well continue higher. HE, we're seeing a rally here, and I've been saying that we're down at the 61.8 of the previous move up, and I'd really like to see it find some support here and continue higher. Otherwise, we could go considerably lower. But at the moment, we're seeing a bounce here, and I think that may well develop into a full reversal. All right, great. Let's have a look at questions, of which we have none. My pleasure as always, guys. And I will catch you guys tomorrow. All right, cheers.